So this is Boeing. For those of you who were watching the focus list charts that I manage, so BA is one of the names that I personally do update for you guys. There's a low here that was due 1028 to 113. I like the action right here where look at the equal lows. This is just a very common theme. We see a flush out below the low, take out all of those stops, and then a curl back up. Okay, let's zoom in a little bit. So these are the equal lows. 1, 2, 3, a flush out below right there, and then the curl up. That is your trade back long, and you can see that right at the close of this bar on 11/18, that is when we saw the curl up in the RS weekly. Keep in mind, indicating the bottoming phase, not indicating anything really confirmed yet, but indicating that this is trying to bottom. And then you saw the curl up. So right here, 174.60 to 184.64. This was the first setup. Now it is a counter trend setup, but this is your first possible higher low. So right here on this higher low, you can see that the RS daily was still red, correct? So what I like to wait for is when the RS daily is red, I want to wait for a clearing of swing highs as the opportunity to look long with a risk below that low. Again, I am always trying to set my stops versus higher lows, right? Really obvious areas that I think need to hold for the overall structure of the move to stay in place. So in this case, because the RS daily was red, it would be a buy stop over that number, 147.30 versus here. Could you have done this move right here long? Yes, but I personally like to wait a little bit more. So 147-ish versus that low there, 141.30. Let's just call it right around 6 points, right? So that's 6 points of risk. Now, what am I going to be looking for? Well, keep in mind what we just saw. We saw these equal lows flush through. That is usually how an intermediate term trough would form. So if this is going to be an intermediate term trough, again, I am looking to be long here, and I will be trading into, if you're drawing your fibs, at first the 61.8 is right here, 153 to 157.80. Those would be my first levels. And you can see how quickly that happened. But again, I added this in as soon as I saw that happening because this was a fairly clean setup here off of that trough. Once more, this is a setup where I like to wait, be a little bit more patient, wait for a clear trap. But I like this move because it was actually a trade back through that old breakdown, right? So if you think logically about this, as price gets above here, this name has been absolute garbage all year long, right? So people have just been, selling this all year long, and rightly so, right? Look at this name. This is just horrendous. From January 4th, right about here, 247 to 140, right? Getting absolutely crushed, and rightly so. But now we have a trade back into range. All of these people who are shorting are all wrong, right? And that's why, look at the price behavior after that. We saw a big bar, close great, hold tight, higher low, correct, higher high. We are starting to grind higher. This hit the first target right there, and then another move back up right here. Okay, so that is I would say an easier setup, and it's all still based on structure, right? My goal here is to help to share with you structure. These are really common setups that you will see across so many underlyings. It's just about finding the ones that you like to trade, but these are really common setups. A clear run of stops below that low, trapped, higher low, trigger the long on the breakout right there, and then 61.8, 78.6. You see these a lot. It is all about, again, understanding where to place your cycle brackets, which is certainly more nuanced, and reading the indicators and reading for phasing. That can really help you get on board some of these moves. And what I like about it is, as I've said previously, when you're early in a rising phase, those moves happen fast and usually quite viciously, because they are taking shorts out to the woodshed, basically. All right, so that's really what has happened here.